It's my pleasure to introduce from Hong Kong and the world, my friend Simon Dixon.
Thank you, Michael. Okay. I've got some slides here. That's me on Twitter if anyone wants to tweet me any photos or any thoughts on anything I'm saying. My hardest job is to try and stay behind this podium. I normally walk around. But thank you for having me. I just want to reiterate the importance of when a conference is held at a jurisdiction like Malta, Gibraltar, Isle of Man, Switzerland, any of these places that are seeing the opportunity. I tend to try and come here and suss out what that actually means and whether they're actually going to be helping this industry move forward. The very first one to do that was Isle of Man publicly, and it's great to see how many have come along since. Just want to reiterate the opportunity, really. Bitcoin, this tiny little experiment. I spoke at the very first Bitcoin conference in the world. I was invited by a guy called Amir Taki, after a guy on Facebook called Johnny Bitcoin told me that he had sold his house to move into a squat in London and work with some of the Bitcoin developers on this thing that he invested all of his money and everything and went homeless in order to put all his money in. You can imagine right now he's a very, very wealthy investor that likes to be left alone and keep quiet and is no longer on Twitter or any of these things. But that was my first introduction. I'm going to share a little bit about the background and story and end with some forecasts of where I think this is going next. But with Bitcoin, I believe it creates competition to the dollar, not as a medium of exchange, but as a store of value. I believe the medium of exchange user cases can be solved or will be solved in other ways. Once you had competition in the central banking system, and it's still at its very, very early days, you then followed with competition to both Wall Street and Silicon Valley through the birth of ICOs and other digitized assets. And so the jurisdiction that sees the opportunity in taking a forward-stancing role in a currency that might potentially back and become a world reserve in the place of the US dollar that's plagued by excessive debt at the moment, but has very great mechanisms to make it a store of value that will eventually go. And then sees the opportunity in the disruption or more competition with Silicon Valley and Wall Street is going to be the jurisdiction that actually has the potential to take on some of the most entrenched interests and most powerful countries and central banks in the world. And to me, risk-reward bet, that's a really good bet to make. Maybe this whole thing fails. Maybe you allocate 10% of your electricity towards Bitcoin mining as a country. Maybe the central bank decides that holding some Bitcoin as reserves rather than dollar and gold and IMF special drawing rights is a sensible risk-reward strategy. And if it prevails, they could be more solvent than the Federal Reserve. That's a good risk-reward strategy for a small country like Malta. And it's great to see that governments are taking on that, and more will, as Bitcoin was designed as this censorship-resistant way for any participant in the world to own your own money, spend your own money, and it's the world's best shot we got at sound money in today's environment. And I look forward to seeing that evolve. So how did I get involved in all this? Let's see if I can get my slides to work. There we go. So this is me in 2006. I was working for an investment bank called KBC. I was a market maker for about 2 years on the London Stock Exchange, doing a lot of what I see in the ICO market today, manipulating stocks and shares that had too small liquidity to actually not be at the mercy of a few whales and rich people. And I was working on the alternative investment market for the London Stock Exchange, and I remember what it's like to actually be able to go out for lunch, have too many drinks, press the wrong button, and send the stock price up 300% because you pressed the wrong button in a fat finger trade. And that stuff still happens in traditional stock markets. So for those of you that think like ICOs are Wild West, the alternative investment market was pretty Wild West then as well, and it still is today. But I decided in 2006 to throw in the corporate ladder, and I wanted to return to studying economics. I had a problem. I did a master's in economics, and I had a problem with traditional monetarism and Keynesian economics. I thought that Austrian economics was onto something because they didn't believe that stimulation of economy was based upon savings, but they believed that stimulation economy was other way around. They didn't believe that the stimulation of economy was based upon spending. They believed it was based upon savings. And when somebody told me about Bitcoin and the monetary policy, I told you about Johnny Bitcoin was the first guy that introduced me. I saw the potential of a monetary policy that was based upon savings rather than debt. And the potential of being able to have a coexisting dual market of traditional fiat money, which is based upon debt, competing with Bitcoin, which is a sound monetary policy based upon savings, was really, really exciting for me. In 2007, before Bitcoin, I went around the world trying to lecture on monetary policy, monetary theory, the problem with basing a money supply upon debt, and the fact that the banks are now the controllers of our entire money supply, and the central banks actually have very little influence in the day and age of the inflation rates at that time. Now, the funny thing is that message was really, really, really boring. No one gave a shit. And in 2007, here's myself and my wife standing outside Westminster trying to find a few people that would be interested in discussing monetary policy based upon sound money. And we didn't have many takers until Northern Rock. Suddenly in 2008, I'd have 300 to 400 people come up to one of my presentations on discussing how the banking system was based, that basing a money on debt was a big problem. And suddenly people were interested in the message. In 2009, I was interviewed for this documentary called 97% Owned. That documentary got 2 million viewers on YouTube. From my previous videos, had about 20 to 30, maybe. Suddenly the world cared about money. And I think Satoshi Nakamoto discovered that the world was going to care about money as well. And the financial crisis was the catalyst for what I believe will be a series of events that are going to change the world in a very big way. It may not be positive, it may not be bad, it's going to be just a big change. And the fact that everyone in this room attending these conferences is going to have to make some financial decisions about how they allocate their resources. And those decisions, unfortunately, we live in a world where we're all speculators. My belief is that the collapsing of the banking system is not a pretty thing. I don't want my grandma to lose all her money so that my Bitcoin does well. I don't think that the collapsing of the banking system is going to be something that people actually want. But the fact of the matter is, governments all around the world are stuck to an agenda that is actually going to cause the collapse of the banking system. And thankfully, thanks to Bitcoin, not only do we have competition where people can choose to opt out, but also we have central banks and governments all around the world looking at this technology. They call it blockchain. And I think that those innovations are going to be the next QE. Rather than quantitative easing at the next financial crisis, I believe we're going to have some kind of replacement of bank reserves, bank money, with a blockchain asset. And it ain't going to be as good as Bitcoin. Owning your own money, spending your own money, and having a censorship-resistant sound monetary policy is going to compete. with a highly controlled, centralized blockchain, probably not blockchain. It will be a digital currency that sits at a Federal Reserve or a central bank. And every time that you don't spend it in the way, you spend it in the way that the government doesn't want you to spend it, they'll shut down both your passport and your wallet at the same time. I think that Bitcoin's got a real good shot at competing with that. But fiat money will always do something better than Bitcoin. Because everything's priced in that country in a local currency, you're able to get stability. And therefore, the medium of exchange mechanism can only really come into existence when the whole world doesn't believe that Bitcoin is a Ponzi scheme, a scam, and a currency for drug dealers. Once the world knows that, Bitcoin's no longer undervalued. If the majority of the world still believe that, then you're sat at what I believe one of the most greatest risk-reward opportunities that exists today. So in 2009 that happened. In 2010 I set about writing the book Bank to the Future. This book was the very first book published in the world that included Bitcoin. At the time, my solutions were mainly focused on central banking solutions, and Bitcoin was too early and too risky to actually have any kind of impact. But I got invited to speak at this first Bitcoin conference in the world in Prague. There was a talk at Occupy London that I think led to the person inviting me, Amir Taki. Then I met about 40 people that looked very similar. Well, actually not very similar to this. It was, I guess the venue could only be described as a crack den in Prague. And you had to have a code in order to get in, and you had to knock several times in order to get to the private hackathon afterwards, where these shady characters with anonymous masks were coding away after the conference. Slightly different to what we see today. Suddenly in 2012, people got interested in Bitcoin, and so I was invited on. Max Kaiser asked me to come along on RT. I think Max Kaiser was at the Bitcoin conference that I spoke at, where I first met him. And suddenly that led to TV invites all around the world, BBC, CNBC, and all these different places discussing. And I remember, I think that little screenshot there was where CNBC was slamming me. I think the headline was Bitcoin crashes below $300 or something like that. Giving me a real hard time for believing that this would actually have any kind of impact in the future. Now CNBC shills Ripple for $3, and they've got their own TV show dedicated to crypto. In 2013, I was invited to the TED Talk, and these are still, all the archives are still on YouTube, and gave a talk about where the financial system would be going next. And in 2014, I gave a talk on TED about how ICOs were going to change and disrupt the IPO markets in the future. I'd invested in a few little ICOs called Mastercoin that was trying to turn Bitcoin into what Ethereum later became. Michael Turpin was involved in all this movement. He was involved in many of these token sales in the really early days. And then suddenly MadeSafe, another one that Michael Turpin was involved with, came along, and I think it was raised, correct me if I'm wrong, it was about 5-6 million or something at the
It was 8 million, and then I think the price dropped about 5.
8 million, and the majority of it was in a token called Mastercoin, and so there was huge volatility, but that was really a game-changing thing. And then I gave this TED Talk about how this little innovation was going to cause disruption in the IPO markets. And then Ethereum came along, did their token sale, the rest is history. Ethereum raised the equivalent of 18 million, from the Bitcoin community. It's interesting to say, I try to remind people that when this competition between Ethereum people and Bitcoin people, try to remember that Ethereum was 100% funded by Bitcoiners. When you hear these silly arguments about Bitcoin versus Ethereum, I just say Ethereum has 0% chance of becoming sound money. Bitcoin has a shot at maybe causing tokenization disruption into capital markets, but Ethereum is not really a smart contract platform as I see it. I see it as a disruption in IPO markets. I see it as the world's largest decentralized funding platform that's not quite as decentralized as Bitcoin, because there's still centralization risks. Because any time you create a token today, you can never replicate what Bitcoin created, because you're going to have to wave the flag of a promoter, and that promoter becomes the person that can make the changes. And so you can never be as decentralized, hence why Bitcoin's our only shot at sound money, in my opinion. That does not compete with disruption in IPOs, an inflationary currency called Ethereum, that's optimizing in order to have scale on that, and then everything that's trying to say we can produce more scale. Remember, everyone says they can produce more scale until they get to scale, and then they become the thing that someone else says we can get more scale to than you. That's what tends to happen when you're looking at these next gen. But these next gen are really important things to look at anyway. So in 2015, we were working, in 2010, I forgot a little story that I wanted to share. 3 companies in the UK, one of them was BnkToTheFuture, incorporated in the UK, lobbied the first regulator in the world that opened the door to looking at investing online, and it was the UK FSA at the time, the Financial Services Authority. It is now called the Financial Conduct Authority. And they sandboxed, without calling it a sandbox, 3 companies. BnkToTheFuture was one of them. And we, at that point, looking at Kickstarter, created a model where us 3 companies could actually allow people to invest in equity online. The UK became the leading country for investing in equity online, and about 3 years later, I think people lobbied the SEC based upon what was happening when the FSA put these rules, because they started to see that this was actually going to start creating disruption in the IPO market. And so the Jobs Act actually came from the work that was done in the UK that we did in 2010. But most of the world started to find out about it when the Jobs Act came along and the SEC were talking. The problem is that when we created that platform, we got authorization and inclusion on the FCA register to allow UK companies to invest in UK businesses from UK investors only. Now, we were in crypto. I was watching the Bitcoin movement grow. And there was not enough companies in the UK, because I wanted to focus. My Bitcoin investment had done so well, I no longer needed venture capital funding. We were no longer trying to create a scalable startup and pitch stats just to get VCs to invest in our technology. We were just focused on the mission of believing that there would be disruption in the financial markets, and startups and fintech companies would be the ones that are going to create that disruption. And blockchain and Bitcoin was going to be the protocol that would lead to all of that disruption. And so there was a couple of UK companies at the time, and there was no liquidity in the market. Nobody was interested. I think Michael was involved in Bit Angels, where he put together about maybe 20 or 30 people, and you could barely get a $1 million round done. At these early stages.
It's about 500, but we did about 30 deals, but you take it to a whole lot.
Yeah. So in 2015, we decided to move to Hong Kong, and we decided to dedicate the platform just to investing in financial innovation and technology companies and Bitcoin companies. We got lucky. We did several deals that at the time were very hard to secure investment for, like Kraken, Bitstamp, Bitfinex later, BitPayzer, Unocoin, and we did about 100 deals through the platform. And we were very fortunate enough to gain, because of the way we set up our business model, we gained equity in what later became some of the most valuable companies in the industry. And therefore, BnkToTheFuture, we decided to move to Hong Kong and deregister with the Financial Conduct Authority and register with SEMA, which is the Cayman Islands Monetary Authority, and work on a global vision to allow people to invest in crypto globally, but this was done through equity. And we did several rounds then, and we were in most of the things because it was really easy to get the rounds then, because there was not many investors. We had to have it global because there just weren't enough investors in the industry. The only way to do that was by focusing on professional, qualifying, accredited investors and dropping the democratizing investment type of thing. And that's because it was the only way of complying with global regulations at the time. And so we ended up building a portfolio that looks something like this. This is just a selection of a few of them. And at the same time, the token sales started to actually create the vision that we originally wanted to create. They were raising funding in a fully unregulated environment from people all around the world that were buying into the utility of their tokens. I think everyone at the time thought they were buying shares. They didn't know what they were buying. And the ICO market came along and essentially did what we wanted to originally achieve. They proved that when you allow anyone in the world to purchase these tokens, and you do it on a global scale, there's a lot of demand when there's liquidity and these can trade on a secondary market. And the ICO movement was born. The interesting thing was we suddenly went from getting every single deal in the industry to 1 month. I remember, I think it was March. I can't remember the exact year. I think it might have been March 2017, maybe if I look back at the records. We lost about 5 of our customers that were all signed up to do contracts, do equity raises, and they all kind up, Simon, sorry, I'm doing an ICO. Simon, sorry, I'm doing an ICO. I think it was Civic, Blockchain Capital, many different, ANX, I think was another one. And suddenly we started to realize equity is not attractive anymore. People don't want equity when they can get a 10x return on a crypto exchange. So we started to realize that the tokenization disruption was happening. We got first-hand experience of that. So in 2017, we slowly adjusted to the market. We put together a regulated structure as a registered securities business, whereby you could invest in tokens and it's in compliance with securities laws. And so we started to syndicate more and more in compliance with securities laws. We believed that there was 2 ways the market was going to go. It was either going to go decentralized, and I had my doubts that was going to happen, or it was going to go hybrid, or it was going to go back to equity, and everyone was going to realize these are securities. So what we decided to do as a strategy is we decided to invest in all the decentralized stuff so that if we get disrupted, we were investors in it all. And we decided to continue creating a platform that we believed was going to be useful in the future to have global securities laws compliance, unique with over 40, 50 different jurisdictions, so that when the investor is from a certain jurisdiction, they could onboard in compliance with their local securities laws. And that seemed like a very strange thing to do, but we continued doing that, and we continued acquiring broker-dealers in the US, for example, and different types of companies so that we could integrate into the platform. But we believe that the regulators at some point are going to jump in and call these things securities. So we took that bet. It was really quite obvious. It seems obvious right now, but, regulators' job or government's job, 2 of their jobs, is to protect from money laundering. They ain't going to give up control of money, and consumer protection of retail investors. And both of those were exposed in the token market. So we thought that it would come around something. And then once we'd created the regulatory structure, we decided to just do our own token sale. And so we did it in full compliance with global, well, as good as we could with global securities laws. And we launched our own token. The token that we created, the BnkToTheFuture token, the BF token, was designed to solve 3 problems that we had. We wanted to do it as a utility token so that it could list on crypto exchanges, and it could be used for the utility, so that people could purchase them from exchanges when they wanted. And we had the utility. The utility that we wanted was, as the crypto market got bigger and bigger and bigger, we suddenly found ourselves in a position where we had 65,000 the equivalent of accredited investors, onboarded in compliance with local securities laws that wanted to invest in the crypto industry. So every time we launch a deal, because we get about 30 applications a day and we only launch about 1 a month that have been through the due diligence process, we realized that as soon as we launch a deal, it sells out straight away. So we created a membership token whereby those who had 10,000 BF tokens could deposit them to BnkToTheFuture, and they would get the deals exclusively, and if there was anything left after the 48 hours, then we would open it up to the whole platform. And in this way, we created a mechanism for rewarding our token holders. The earlier that they purchase those things, this was the idea was that they'd probably get those 10,000 fairly cheaply, and if everything works out with the token economics, then those will become more and more expensive to become a member, and the earlier you were involved, the more you were rewarded by receiving more and more deals that we were getting access to. That was the first one. The second problem we tried to solve was we realized that as a centralized company in compliance with securities laws and seeing all this innovation in the decentralized movements, we needed a way to scale better. And many of our investors were really, really smart technical people. They became really rich through Bitcoin, then Ethereum, then ICOs. And we started to notice that that we had a next generation high net worth investor that made all their wealth through crypto and actually had some really, really good experience. And we wanted to tap into their experience to do due diligence and investor relations. But these rich people and people that were, or just on the early curve of being just high net worth, they were really into the movement of crypto, so they were motivated in different ways. You'll see the reason that ICOs actually became such a big thing, in my opinion, is because we created a self-funding mechanism where we no longer needed to get a bank loan, go to Silicon Valley, or persuade people that knew nothing about our industry. And we created a self-funding mechanism whereby the people that became rich with Bitcoin, Ethereum, and other ICOs later, and other tokens later, wanted to redistribute their wealth in order to be more speculative, to accumulate more Bitcoin or more Ethereum or whatever. And so this whole ecosystem evolved, which is why the store of value of Bitcoin grew with the entire market and everything grew together. That was the 2017 year. So we wanted a way to reward people, so we created the token whereby if people were conducting due diligence, finding deals for us, then we could reward them with our token for doing what they were doing anyway, but an extra thank you as well. And the final thing was payments. So this year in October, we're now launching our secondary market. And our secondary market is taking the equity that we accumulated that is pretty much impossible to accumulate now. And because of the structure we did it through via an SPV, where we were the institutional investor, we can create a secondary market in the SPV that owns the equity in the company, and we can have independence to do that. And so we can now create a secondary market, and we wanted to do similar to learning from the Binance model, where if you own the token, you could get discounts to trading on the secondary market. And we could open up a lot of the largest companies in the industry to some kind of pricing mechanism whereby the valuations could be done, and we could open specializing in this industry. We're due to launch that and open the first market in October. And then next year, we're working on our own securities exchange as well, because we believe that in some instances, blockchain is touted to do things that a database can do well. And so we want BnkToTheFuture to remain doing things in the fast, nimble way that you can do when you control a centralized database, but also innovate in the securities token market, because I think that there's some really interesting things that can come when you can tokenize securities, and I think that will be a next really big wave of that. I'm not fully convinced that it can be bigger than most people think it's going to be bigger than the securities, the utility token market. I still think that utility tokens are really important, and I'll tell you why. One of the main reasons why I think Bitcoin's important is not just that it might become the world reserve cryptocurrency and the only shot of sound money, but it also has a force and effect on countries all around the world. It means that the dollar needs to be more honest when people can actually have an exit opportunity of what to happen with that dollar. So when people in Cyprus start to steal your money through bail-ins, at least you got Bitcoin as an alternative. Although it's got volatility, you got it as an alternative for your savings. When Greece closes down the ATMs, at least you got Bitcoin as an alternative. When India says your life savings are now illegal tender and you've got to change all that, risk your life, stand outside a bank so that they can digitize the money supply, and you risk all your life savings, at least you've got Bitcoin as an alternative. When Donald Trump becomes president and you happen to lose 25% of your currency value just because you're Mexican, at least you've got Bitcoin as an alternative. I think decentralization is really important in regulating the regulator. That's what I think is really important. You will have decentralized markets, you will have regulated markets, but remember that the regulators were the same people that created one of the biggest fraudulent schemes that we've seen in the financial crisis. They regulated that whole thing, and they were involved in that whole thing. And the system fell because the regulator didn't have a regulator. And I believe that Bitcoin is the regulator of the regulator. I believe that when you're at risk of flighting currency into a sound monetary system, the governments are going to have to innovate money and reverse some of the policies that are creating really bad user experiences. I believe the ability to own your own money, thank you. I believe the ability to own your own money, spend your own money, and have sound money means that we're going to have better fiat money as well. And fiat money does have its use. When I land in Malta, it's useful spending euros and knowing that those euros are going to be able to buy the same good for the next few weeks. When I pay my rent, it's not very nice. I recently had to make a large purchase because I decided that I wanted to switch countries and purchase a house. And it took me 3 months to get crypto out into a position where the bank would accept those funds. And almost a forensic investigation of me having to explain everything, and even then be at risk of not being able to purchase my own house because banks are the gatekeepers to the fiat currency. I believe that having Bitcoin as an alternative meant that if that forensic investigation didn't prove that I had the money in a legitimate way, where the bank was willing to receive that money, would have meant that the property developer would have just accepted Bitcoin direct because they didn't want to lose the sale. And so I really didn't care which way it went. But if the regulated system doesn't focus on consumers and consumer needs, and they get too controlling, then I believe that the decentralized movement is going to drive people into that, and that regulates the regulator. Anyway, tangent. Seems to have moved. If anyone's got the laptop, maybe you can get to the... There we go. Let me try and go back one. So here was our ICO. We registered it. Here's a really interesting thing. We registered it as a Reg D filing with the SEC. We wanted to do everything in compliance with global securities law. We did the whole thing through BnkToTheFuture.com and did the things that we need to do as a registered securities business. The funny thing is that we sold out the pre-sale on BnkToTheFuture in 15 hours, 30 million in 15 hours. We also wanted to do a public sale and allow people that wanted to purchase the membership token to do that. So we restricted everyone to $1,000 blocks because that was the cost of our membership, what you needed to deposit. We made the pre-sale and the token sale completely fair. Nobody got different terms. Everyone got the same price, no bonuses, nothing. We didn't want, claims that there's forerunning and front running and all the things that I think the regulators are going to be looking at when they look at some of these token sales. And the really interesting stat, we sold out the public sale in 2 minutes and 17 seconds. So it was 33 million in the end that we ended up pulling in. But when we registered it with the SEC, when I looked through all those stats and whitelisting and KYC and everything we had to do, we realized there was only $127,536 from the US. $33,126,000 was from the US. That was not possible in the past. You had to relocate to Silicon Valley as a tech startup in the past, and you had to bow down to the US laws and become a US taxpayer, and you had to pay tax for the rest of your life, no matter where you lived, in order to raise 33 million in the past. Now you can go to Malta. Now you can go to Gibraltar. Now you can go to Isle of Man or Switzerland. And you know what? The US is becoming the worst place in the world to do this. I see that as the disruption of Silicon Valley and Wall Street, and Silicon Valley and Wall Street are going to have to get more honest to compete. The VCs are now just one player in this industry. They are not the gates. They are not the gatekeeper. And that's really important. But what happened? Regulators came along and said, oh, if we had let 2017 continue, the American economy was at real risk. Crypto was going to take every aspect of every asset class in the world. Investment banks were all looking along and coming along and saying, how do I delist this in order to look and get in some of that? How do I do a token sale at the same time as my IPO stock? How do I buy this, ginormous asset in New York hotel and do it through a token sale? How am I going to create a fund that actually uses a token in order to purchase stocks and takes more and more, and Telegram comes along and says, we want $2 billion, and that's going to be converted to crypto. Guess what? Because of the friction, money doesn't leave crypto so easily. It took me 3 months to buy a property because they wouldn't accept Bitcoin, but I knew they would have in the end. And that's the friction that you have. So here's what becomes really interesting with the regulated environment. In the regulated environment, it means that it sucks up dollars and it keeps them in crypto. That crypto money is not going to leave, but it also had a knock-on effect. In the token sale industry, while there was lots of scams, lots of problems, the regulated environment is now replacing those scams with another scam. And that is that there's just shysters all around the world that are accredited investors and VCs that are negotiating deep discounted tokens and selling them on to retail investors or people on the market. And all the regulated environment is doing is it's creating another problem and replacing it with another form of problem. So now we've got regulated environment. It just means that you've got 20 VCs that invest in your token sale, in the pre-sale, and they take some of that power and then they're flipping it on OTC markets to other people and all sorts of shenanigans happening. Before, it was everyone investing small amounts of money in lots of things. And although that had its problems, the problems you're seeing today are just as bad in the regulated environment. And so the regulated environment just replaces one problem with another. And it also creates regulatory capture, which is why it's always chosen, because the governments do want to control your money. They do want to tell you how you can spend your money, and they do want you to be reliant upon their unsound money. And the two markets will coexist. And you've got to just decide which markets you're going to participate in. I participate in both because it's the only sound way you can actually manage it. But my savings are not touching the inflationary monetary system. My spending money will. And I have to spend it that way for stability. But my savings aren't touching it. And I believe more and more people are going to realize that as cash becomes illegal. When we have the next financial crisis, because they solved the problem with the cause of the problem, the mortgage-backed securities market that was completely endorsed by regulators that allowed for this Ponzi scheme of finding people to take on debt so you can stimulate your monetary policy and create more money because the government outsourced the creation of money to the private banks. And by the way, it's funny, when I went back to my economics, I was trying to tell the world about fractional reserve banking. At that time, nobody would believe me that banks actually created money. They just wouldn't believe it. They thought I was some cuckoo fairy. I even got chucked off of the stage at London School of Economics after giving a presentation there. I was taught in economics that banks are an intermediary between borrower and lender, and that there's a multiplier effect where the central banks control how much money the private banks can lend through interest rates. The funny thing is the multiplier effect has never been true. There is no fractional reserve, there is no fraction, and there is no reserve. Banks can create as much money as they're willing to lend, and that's it. And if they can pass the credit risk on to your pension, they will. That was the financial crisis. They took the risk. They wanted to lend as much as they could to stimulate the economy, and the governments wanted them to do it too. And the governments regulated that whole environment. And so it just replaces one thing, replaces one with another. So through this whole thing, once Johnny Bitcoin told me about Bitcoin, and I got my first Bitcoin at that first conference in Prague, I was fortunate enough to see the first wave of complete, disruption being the price of Bitcoin. I've seen crashes like this today. I remember Bitcoin crashing from $30 to $3, 90% correction. Everyone was saying it's over. I've seen Bitcoin crash from $1,200 to $250. Everyone thought that was over. And I've now seen Bitcoin crash from $20,000 to what looks like maybe $5,000 or wherever we're going next. But the cold, hard reality is that there's only 21 million, and most of them have been lost and stolen. And this is our best shot in the world at sound money. And everyone in the world at some point is going to realize that they need Bitcoin for some political reason, or every fund manager in the world, when we have custodial solutions, are going to realize that their fiduciary duty is to own Bitcoin in their fund as a hedge and an uncorrelated asset against what might come, the stock market crack, with everything that's correlated together, because QE was the solution that they used. I believe that in the next financial crisis, they will let banks go bust. The reason they're going to let banks go bust is because there will be riots in the streets if they take your taxpayer money and use your pensions in order to bail it out again. But what are they going to do? They're not going to leverage the central bank's reserves. Those are all insolvent. What they're going to do is the central bank is going to let JP Morgan Chase go bust, and they're going to say to you, where's your digital wallet? Here's the digital version of the dollar, Tether, their version of Tether that the Fed creates. And they're going to say, download this wallet, and whatever balance you had at JP Morgan Chase will be on your wallet. And they're just going to replace the money that was created as debt with central bank created digital currency. And it's just going to be a ledger, a digital ledger on the central bank's balance sheet, and they're going to open up the API keys, and they're going to allow fintech companies all around the world to replace the banks. And if banks want to get involved, they're going to have to deal with their solvency issues as that gets replaced, because we still got the credit card crisis, the student loan crisis, the property market crisis, and everything that comes from that to go. Because the property market crisis was never solved. They recapitalized the property market with debt. And they got put together government schemes so that people could take on more debt. Right to buy, rent to buy. It's all still there. The thing still is still there. So anyway, the next wave was equity in companies, and then we had altcoins. Everyone come along saying, we can create something with faster, cheaper, more secure, and that created a wave of opportunity as well. Then we had the tokens and ICOs after Ethereum became popularized and created the ERC20 standard. And then the interesting thing was the hard forks. How many people have got free Bitcoin Cash just as a dividend for owning Bitcoin? How cool is that? So now when someone has a new scalability solution where you can keep the developers more, the ecosystem more honest by coming along and creating a hard fork, everyone that owns Bitcoin gets some free money. That's pretty cool. And so hard forks created a whole dividend, which also increased wealth. And the next wave is what I believe is going to be the security token side. So that's why we decided to get into the security tokens market as someone that had a lot of securities in our SPVs. How are we doing for time, Michael? Am I done? Okay. Okay, I'll wrap up. I'll end with some forecasts on what I think is coming next. I've already talked about the decentralized centralization movement. People are like, are decentralized exchanges going to replace centralized exchanges? Absolutely not. Regulators all around the world are going to take regulatory capture through the exchanges. And people that don't care about privacy and don't care about those things will definitely 100% use centralized exchanges. And the reason that they'll do that is because the centralization user experience is always better than the decentralized user experience, but that might change. That's where we are today. And so you're going to have a two-tiered market. There's two markets for Bitcoin right now. You either put it on your hardware wallet, own it, spend it as your own money, and have freedom and sound money, or you decide to keep it at an exchange, do AML, do KYC, and they tell you whether you can spend it or not, and if they get hacked, they'll tell you whether you've got money or not. We've recreated banking with the exchanges, but there's still the on-board and off-board between fiat currency. The exchanges are not a crypto problem, they're a fiat problem. And so governments all around the world are going to decide what they want to do. Malta comes along and said, let's create regulation for these exchanges. Japan comes along and says, let's make Bitcoin as good as legal tender because they've got a future vision. And now they get all the data. What does China do? China bans exchanges. Stupid. China had the opportunity to have all the KYC and all the data through these exchanges on all of their citizens. And what happened? They relocated to Korea, Singapore, and Japan. And now Japan, Singapore, and Korea have got all the data in KYC. And now China doesn't know what's happening with Bitcoin in their own country. In fact, most people are taking their renminbi, buying mining equipment, getting Bitcoins out, and taking them to a Japanese exchange or a Korean exchange or a Singapore exchange. Clever. China will realize that at some point, and they're going to create their own versions of centralized renminbi. But when you realize that those currencies are different and worse and they don't compete, you'll have decentralization as an option. Because hardware wallets are hardware wallet, peer-to-peer, digital cash, digital tokens, digital securities will exist. The problem is the governments are going to attack them in a major way. And therefore, the only way they're going to be useful in the future is the same way that Bitcoin was useful. No founder, no identifiable point of attack. The same will happen with decentralized. And so it will drive it to the back market, it will regulate the regulator, and by the way, those markets are big, very big. But the interesting thing is that when you know that exists, just like in the war on piracy, war on drugs, you end up putting friendly policies, friendly jurisdictions, and a country like Canada comes along and says, we'll just make drugs legal everywhere. And then we'll be able to regulate that. And so the decentralized, illegal black market always drives that, and we get a better society as a result, I think. Regulated ICOs versus unregulated. I think everything's... Now, do remember, the SEC is not the world. If you step outside America, you see a very buoyant system for utility tokens. And many people in America are very jealous of people that weren't born in America and their ability to purchase utility tokens. And so just because the SEC says that all tokens are securities tokens, it doesn't necessarily mean that's the way it's going to be in the world, because Malta could come along and say, well, if we treat this as a new asset class and have KYC and certain things on the sell and promotion, then maybe it doesn't necessarily need to be a security. So we've now got regulatory arbitrage all around the world, which is why it's really, really important. If America continues doing what they're doing, they could just be the worst place in the world to raise finance as this industry gets bigger and bigger and bigger. They recognize that, so what do? They have to have to come out and say, Ethereum's not a security. And then they have to come out and say, under certain circumstances, this isn't a security. And now regulators are becoming the gatekeepers for decentralization, a role that they were never meant to play. Interesting things that come from this. I believe that at the end of the day, Bitcoin will be the reserve, not just the, at the moment it's the world reserve cryptocurrency for cryptocurrencies. I believe it's going to be the world reserve cryptocurrency for currencies, and it will be the world reserve cryptocurrency for all assets. When every single asset gets tokenized and securitized, it will be traded against Bitcoin. And trading it against Bitcoin means that fiat money is entering the crypto sector and it tends not to exit. It tends to stay there because of the friction. And once you realize that you can have freedom of owning your own money, spending your own money, and sound money, you tend to use that as the mechanism by which you trade all these different assets. Every single asset in the world is going to be tokenized. It just is. It's happening. It will happen now, in the future, and whichever jurisdiction gets in front of that is going to get they're going to be the person that has the data capture on that. That's why they're here. This is where all the jobs are. This is double-digit growth every month jobs in an environment where bankers are leaving the banks and trying to create their own startups. This is where all the growth is. Yeah, government-backed fiat currency, that's just definitely going to happen in terms of digital currencies. They don't need a blockchain, by the way. They definitely don't need a blockchain to create a digital fiat. They already outsourced that to bank, and they said every time you issue a loan, you can create digital fiat. If you have a positive balance in your online banking, that was a digital currency created by the private banking sector. So banks invented digital currencies already, but I think central banks are going to attack retail banks, and they're going to release API keys and allow fintech companies to innovate on top of their APIs. I think it will be a worse form of money than the bank-created money. I think if I land in a country and they don't like what I'm doing with my money, I think my wallet's going to get shut off at the same time. You know, the user experience of the user experience of spending a few dollars is pretty good. But the user experience of trying to transfer a few $1 million sucks. Bitcoin kicks the shit out of that user experience. Anyway, these are some of the things that I think are going to be coming ahead. If you want to join any of our communities at Bank to the Future, there's some of our groups and Telegram and stuff. If we've got time, Michael, I'll open up to a couple of questions.
Great.
I was meant to do a fireside chat. I don't know what happened to that. That was, I think I took it as the keynote instead.
All right, well, great talk. Let's give him a big round of applause. Nicely done. You guys have questions, just raise your hand, and I'll bring the microphone over. So anybody have a question for Simon? Questions? Yep. Just tell us the name of your company and tell us your name.
Hi, this is Anuj from Peak State. Very good presentation. Firstly, I want to congratulate you. It was very encouraging. I just have a question. What do you think will encourage the retail token buyer to come back into the market? Because, you know, as most of us realize, the retail token buyers in Europe at least are not buying. So a lot of people are buying less. And a lot of people are focusing on China, Singapore, Korea to find their retail token buyers. So what do you think, what should change in the market to get more retail token buyers to invest?
Yeah, I think retail. Retail is going to be utility tokens by overseas jurisdictions. I don't think retail are going to have a role in the securities token market because we've already got IPOs and the expense of doing it is just the same if you do it through a securities token. So unfortunately, regulators are going to take retail out, and the only way to change that is at the regulator level. The challenge with that is I've got a lot of experience at this whole retail versus private versus public versus accredited. The challenge that regulators have, and it's a bit unfair to just say that the regulators are these evil people that just want to keep retail out of investment opportunities. Well, you know, as we saw in the tokenization, a lot of people became wealthy as a result of being able to participate, and it would have been a shame if they couldn't. And their life would have never been the same if they couldn't. But the problem with retail consumers, from my experience, having done a platform which did originally do retail and then switched to accredited, is retail people really freak out when they lose money in a way that accredited don't. And what they do when they lose their money is they try to get a good bet that works in their favor. And they say, if it works out, I'll keep all the money. But if it doesn't, I'll go complain to the regulator and whinge, and suddenly I'm no longer a Bitcoin activist, anti-government anarchist anymore. And so what they do is, because the money is so important, and this friction, I don't know the solution. I don't really know what the solution is going to come. But how you get the right people investing that understand the risk-reward profile, I don't think gets solved from regulations, and I don't think gets solved by crypto either. Because that's going to be a constant tension and friction, and it's going to continue. But one thing I do know is retail are really, really problematic people to have as investors in your company. And when it goes wrong, they complain to regulators in a way that, not saying in all the cases, but in a way that doesn't happen when you do the accredited round.
Okay, great. Any other questions? Any other questions for Simon? Going once, going twice. I guess you answered everybody's questions, Simon.
All right.
Wow. Good job.
Okay, thank you. Yeah, thanks for having me, Michael, last minute.